Hello traders, this is David Rodriguez, quantitative strategist for dailyfx.com, here to talk about the US dollar, the Japanese yen, the euro, and why retail FX trader data suggests that the greenback may have finally turned around versus both the single currency and the previously tumbling Japanese currency. So the fact is this: we've talked fairly consistently about buying the greenback versus both the yen and the euro for the simple reason that retail FX traders have remained heavily short the US dollar, and as those who follow along regularly will know, we typically go against the crowd. So if everyone's short dollars, we typically like to buy, and that's been the case for quite some time. The fact is, however, that since last week, first I'll start by saying that last week I was very bullish US dollar, particularly versus the yen and the euro. So obviously this is why we use stops. You can't blindly get long without acknowledgement that you could be dead wrong, and in fact I was, and that's my fault. It happens. That's just a matter of probabilities. And again, putting those stops in place such that if you're wrong, you don't get decimated, so to speak. So the fact is that since last week, the dollar yen has turned sharply lower while the euro has bounced, and in doing so, it's brought out a lot of dollar buying from retail FX traders. So in this case, dollar yen buying, euro selling. In fact, traders are now pretty heavily long the dollar yen, while they're fairly heavily short the euro dollar, at least in relative terms. And I'll say this: the caveat is this: sentiment has been very choppy on the euro in recent weeks, but overall we've maintained our dollar bullish trading bias. The fact is, however, that this turn looks like it could be the real deal, especially when we see a sustained shift towards euro selling, and at the very least we'll stop selling into euro bounces, buying into dollar yen declines, and that's the bare minimum. The chances are, however, especially if we see dollar yen acceleration below 117 or euro acceleration above 125, it could be the start of a much larger dollar pullback. And I'll say this: it's a bit odd saying all of these things through mid-December, especially given the fact that starting next week, most traders start going on vacations, close positions, shut down for the year. But the fact is that, and I posted this on Twitter earlier, I'll post a link to the chart below. The fact is that volatility prices are their highest on the year, even on a one-week level. And part of this is probably due to the fact that next week, Wednesday in particular, brings the U.S. Federal Reserve interest rate decision. Thursday night brings the Bank of Japan. So that's something to watch. But overall, you get the sense that traders are pricing in further greenback and Japanese yen volatility in particular. So that's something to keep in mind, especially as we head into a typically illiquid part of the trading year. So with that, I wish you all best of luck trading. If anything changes, obviously we'll change our trading biases accordingly. And I'll talk to you soon. Take care.